What is up, guys? Welcome back to my channel. So in my last video, when I talked about portfolios, I went over different scenarios and different types of portfolios you could use based off of your risk tolerance. In today's video, I'm going to show you guys my portfolio and what exactly I plan on doing for this next cycle. I do think, small caveat here, that my portfolio is going to evolve and change throughout the cycle. So this is going to be a starting point, a general idea of where I'd like to get to in terms of number invested, and also the different sectors and different coins I'd like to invest into. So just remember that as you watch this video, and I highly recommend watching the entire thing because I do think it'll help give you an insight onto where my head's at for this upcoming cycle. Remember to check out my private Discord in the description below. We are running a 25% off discount code if you're looking to join a great group of people that have access to the best tools to make as much money in cryptocurrency as possible. This is the group for you. All right, to start this video off, I think it's a good idea to kind of share how much I would like to invest into cryptocurrency during this bear market. And what I'll say is I would like to get close to, if not slightly above, low six figures into the cryptocurrency market before everything starts to go nuclear. And so for the sake of this video, let's just say I'm looking to invest in total into every coin that I could possibly want to get into around $100,000. Now just remember, $100,000 is a lot of money, and that's something that I could afford to lose if everything goes to zero. That would really suck. I hope that doesn't happen. And based off of the strategy and different strategies I'm going to show you throughout this video, I absolutely do not think that is a possibility. Worst case scenario, if I'm dollar cost averaging in a few of those buys I have over those couple weeks, a couple months of my dollar cost averaging being live, maybe I'm down on those buys, but my average ends up being really good in the long run. But for you personally, if you only have $5,000, $10,000, or even a couple $100, you can still base your portfolio around one of these strategies, around one of these different types of ways you could structure your portfolio to make as many gains as humanly possible. Okay, so to start off, Bitcoin is going to be a part of my portfolio. It will probably end up being anywhere from 15 to 20% of my entire portfolio. I do think it would be a mistake to fade Bitcoin altogether, and I said the same thing in my previous video about portfolios, which I would highly recommend you go watch, is that if you have low liquidity and low capital, Bitcoin probably is only going to offer a potential 2, 3, 4, maybe a 5x during this next cycle. That would be really crazy price prediction kind of stuff. If you have a low amount of liquidity, a low amount of capital to invest in cryptocurrency at all, then you may want to look towards Ethereum or different altcoins that would potentially provide a higher amount of upside for you. Obviously coming with more risk, but potential upside for the risk. That risk reward ratio could be beneficial to you personally. Okay, and so knowing that I'm looking to put around $100,000 into cryptocurrency at some point, my Bitcoin bag will probably be close to around $20,000 invested in total. And so the strategy for Bitcoin and Ethereum, for those two coins specifically, is going to be to dollar cost average into them over time. So my dollar cost averaging into Bitcoin has been on for several weeks, and so far the average has been pretty decent. Right now my dollar cost average is around every other week, and as you can imagine, I'm looking to get closer to $20,000 into Bitcoin over the next, 6 to 12 months potentially. And so you can kind of do the math there and kind of see, how much I'm dollar cost averaging on a bi-weekly basis, knowing very well that my strategy is going to be flexible, right? If we go down in price, if Bitcoin goes closer to $20,000 again, $18,000, we break below 20K, then I might very well up the amount that I'm dollar cost averaging on a bi-weekly basis or increase the frequency of which I'm DCAing. Okay, moving on right down the list, this is no surprise to anybody else, but Ethereum is going to be a part of my portfolio and is going to be a bigger part of my portfolio than Bitcoin. And so for me, I'm probably looking to get somewhere in the realm of $30,000 to $40,000 into Ethereum before the next cycle. This would make up about 30% of my entire portfolio, something around that range. And to me, that seems like a decent bet because A, I think Ethereum is a blue chip. B, I think Ethereum is one of the biggest ecosystems we have at the moment, has a ton of development happening, just recently went from proof of work to proof of stake. And there's also rumors and stuff around an Ethereum ETF coming in the future as well. And so while I do think it's realistic that Bitcoin could see a 2 or 3x during this next cycle, I think Ethereum could easily see closer to a 3 to 5x during that next cycle. And so that's why I would like to have more money into it, but also decreasing my risk because I really do think Bitcoin and Ethereum are going to probably appreciate the least in terms of X's if you compare it to many other altcoins that probably will go on runs during this next cycle, but also the least risky bets, I think, overall, if in terms of investing in cryptocurrency. So the next next major section of my portfolio is going to be GameFi coins. And once again, like I said, I'm not going to give specifics, but I talked about a few on this channel that I may have exposure to. But for me, it'll be about 15% of my portfolio into GameFi coins, and that will probably make up around $20,000 of my portfolio. I want to say anywhere from 3 to 5 coins. I don't want to get into too many coins because I don't want to have to manage all of that, but I do want a decent spread. So if I do catch, you know, a random GameFi coin that just absolutely rips and moons during the next cycle, I can take advantage of those profits. And so it's a popular narrative around crypto Twitter and just crypto in general that gaming and NFTs and gaming and crypto is going to be huge in the future. True ownership of your assets in game, I do think, is the future of gaming. I just don't think all the different gamers quite see it yet. And so that being said, I would like to have a decent portion of my portfolio betting on the GameFi ecosystem. All right, so the two altcoins that I do plan on getting some money into is going to be Solana and Cardano. I did well in Cardano in the last cycle, and I kind of faded Solana because I didn't want to focus on too many different coins, but I'm pretty confident that those two altcoins in particular are going to do decently well during this next bull run. And so my portfolio will probably look around 4% into Solana and 4% into ADA if you factor in the entire pie graph. And so that is probably going to be around, you know, anywhere from $5,000 to $10,000 into each of those coins. And then for me, the next major section of my portfolio is going to be layer 2s that live on top of Ethereum. Layer 2s, I think, have large potential for this next coming cycle because you're still betting on Ethereum. You're just betting on upgrades to Ethereum that other developers are making. For me, that's going to be about another 15% of my total portfolio, give or take, right? These are rough estimates. And so I'll talk about different coins in particular, but it'll be like the Matics of the world, you know, the Arbitrums of the world, those different layer 2 coins. And so far we've gone over Bitcoin and Ethereum, taking up a decent chunk of my portfolio. We have Solana and Cardano in the mix. We also have different GameFi coins, and we also have layer 2 solutions thrown into my portfolio as well. Now, I just want to touch on this before I go into the last section of my portfolio. The main goal is to dollar cost average into Bitcoin and Ethereum, and most likely, instead of dollar cost averaging into the rest, when I start to see bottoms come into place for Bitcoin and Ethereum, that's when I'll probably start to definitely dollar cost average into them, but it'll be at a lower frequency, but bigger sums of money. So maybe that 15% of my portfolio will only take maybe 3 to 5 months to accumulate with lower frequencies, but bigger lump sum buys. Still dollar cost averaging because I want to make sure like a local top or something like that, but also getting in fairly quickly after I potentially identified a bottom for Bitcoin and Ethereum. And so that being said, the strategy also applies to this next category, which is going to be low cap altcoins outside of the GameFi ecosystem. And you know, these might very well include some more degenerate coins, maybe even some meme coins, you know, throwing in a couple $1,000s into those, hoping for a moonshot, for me is worth it in my portfolio because I'm leaning towards slightly more risk versus slightly less risk for this cycle, because I think there's a lot of catalysts, which I outlined in one of my recent videos, to suggest that this might be some sort of crazy bull run in the next couple years. And I do think if you take the total low cap coins outside of gaming and L2s, and I think that would be about, you know, 10 to 15% of my portfolio, so anywhere from 10 to maybe $15,000 to $20,000 in these more like degenerate, hopefully moonshot coins. So that's my plan there. It will probably be a more slow and steady dollar cost average for those specifically, because those coins are probably going to be very volatile, much riskier than the rest of my portfolio. And so overall, I'd want to take that a little bit slower. A slow burn there is going to be the right decision for me. All right, so now I'm going to give you guys a visualization of the current portfolio, which we spoke about just in this video. 16% into GameFi, 16% into low cap non-gaming coins, about 15% into ETH L2s, 17 to 20% into Bitcoin, 30-ish% into Ethereum, a small percentage into ADA, a small percentage into Solana, and around 15 to 16% into GameFi. Like I said at the start of this video, this is going to change and evolve over the course of the bull run. You know, know, the tiny percentages, whether it's 15% or 16%, isn't going to matter too much because, you know, in these hypothetical scenarios, we can have nice round numbers. But when it comes to the actual dollar cost averaging into your portfolio, depending on when you turn it off and when you turned it on, it might be a slightly less easy to use number. And so I think in all, the total portfolio might be closer to 10 or so coins. I probably wouldn't go above 12 to 13 coins. I think that would be too many for me to manage. If we're hitting GameFi and we're hitting L2s and we're hitting low cap coins, maybe some meme coins, we're hitting some of the biggest higher cap altcoins and also having a bag into Bitcoin and Ethereum, I do think that for me personally is going to be a smart strategy. I've covered a lot of bases. I've covered a couple, I think, smart and potential bullish narratives that people on Twitter like to push. And it's also not too many coins for me to manage overall. And so I'm very curious what you guys think of a portfolio like this. Comment down below if you are going to have a similar one. And if not, comment down below what type of portfolio you plan on having. Very curious to your guys' answers, and also am happy to make changes to my portfolio if there are smarter, better ways to do things. You know, as an investor, it's not ever a good idea to get married to your bags. Cutting losses, taking profits, being flexible and being open to different meta shifts and narratives is 100% a good skill to have. I hope you guys enjoyed this video. If you did, subscribe to my channel. I would greatly appreciate your time, and I will see you guys in the very next one. Peace.